What's going on, everybody? It's November 14th, 2022, daily log episode 51. Today we're going to cover ES, futures contract, and what was predicted from the beginning of the week, and then what actually happened during the session today. So everything basically played out to script quite perfectly. I think it was honestly very easy to identify. Now, I talked about how Monday was going to probably create consolidation and probably a lackluster of, a good setup. Now that was the AM session. The PM session actually had a really couple good setups. I unfortunately missed them, which I'll cover at the end of the video here. Let me do this so I do not forget. I believe many people have asked me this, so please let me do this. This is for midnight open, and then at least my time, 7:30 open. It's called John Phibbs London and New York Open. This is just to see, power of 3. So this is my settings, and then the style here, and then visibility is open on all of them. And then this is just daily high and low. I guess I could open that up. So that's there. I really don't ever utilize this. And then for sessions is the biggest one I get asked. When you click the indicator on here, you'll go to the 3 dots and it'll say to move to, and you can move it to existing panel below, and I'll move it down here. That way it's not all across your screen. And then this is my settings for this. Again, this is my time zone, so please match it up with your own style and visibility. So that's for those who are asking. Now let's cover today coming into the week. So yesterday on the weekly forecast, this was what I was predicting. So either option A here, which ended up playing out, or B, we drove higher into the fair value gap. Then this morning, I posted the 15-minute chart. Here is the opening gap, and I want to see the buy side liquidity ran. So the morning session, I took a small trade. This is on demo paper trading, and I was talking about how the reasoning why this was a low probability trade for me, and the reason why I took it on demo, is because it was inside of internal range of liquidity. So what that means is it's stuck in between a dealing range, and you want to see the external range liquidity be purged first. That creates a high probability trade setup with this model. And I had a lot of people, sending me messages, trying to figure out if trades were good inside of this area. No, inside of this area is low probability. If anything, you need to go be for very short scalps and, 5, 10, maybe 15 point, scalps. And that's all you want to be doing. And you shouldn't be placing a lot of trades. And if you have a problem with over trading or fear of missing out, just utilize the paper trading, because A, you get exercise, you're tape reading, and you kind of get rid of that FOMO and you get rid of that greed, because at least you're doing something. At least it kind of satisfies that greed aspect, at least for me, and it helps me sit on my hands more and wait for a better setup, and I don't feel like I missed anything. Okay, so I'll go over this. Let's review the day. So I talked about the volume imbalance on the daily chart to pay attention to. We drove right up into it, taking out Friday's high there. We displaced lower, which is exactly what we're looking for. I forgot to mention this on the weekly forecast, but on the morning log today, I mentioned this volume imbalance bullish, which we'll see how we respect that. Personally, I don't really see a reason for us to use it to send price higher. I'd rather just see it get filled on the way down into the fair value gap here. Going down to a 4-hour chart, ran right up into that volume imbalance there, balanced price range, taking out Friday's high, and then displaced lower. 1-hour time frame, same thing. You can see the buy side a little bit more clear here, running out buy stops, and then displacing lower to attack the sell side liquidity that was built up from the morning session. We remove a couple of these. So before the session started, we were resting here. And I was saying how I was looking for this, okay? And that didn't happen until the PM session. So if I go over to here, is it gonna show it? Oh, maybe because I'm in review, hold on. There we go. So let me go down to a 1 minute time frame. So just ignore all the price that happened after, because this is, in a sense, a good model example if it was on external range liquidity. So I was just looking at how price was in between the dealing range. So keep that in mind. This is all internal range liquidity. So price purges the sell side liquidity. I'm overall bearish, but I'm looking to long to take out the buy stops. So I saw price purge the sell side and then displace higher. We have a fair value gap resting here. So I went long there, and just for transparency, it wasn't really at the fair value gap. And once we dug down into here, I bought more. Again, this is just paper trading. I don't really care. And then I highlighted this one just to kind of see if price would respect it to displace up into that buy side liquidity, which eventually we fell right through it. And then I was watching this order block here, bled right through it. And then I jumped out to a 5 minute time frame, and I'm just tape rating here. I'll just practice. And then I jumped out to the 5 minute. I was paying attention to the breaker here, touched on it and displaced higher, and then ultimately bled through it. And that's the reason why I don't trade internal range liquidity raids, because it can get really choppy. It can be seek and destroy. It's low probability. I'd rather wait for that external range liquidity. If you want a high probability trade setup, you want runs on previous day highs, previous day lows, weekly highs, weekly lows, nice pool of liquidity, low resistant liquidity runs. That's what creates these nice models. But when you're inside of a dealing range and you're just taking out internal range liquidity, that's what creates these type of environments. And then you're wondering why you're getting stopped out, because you're not paying attention to the bigger picture. You're getting lost inside of the 5, 4, 3, 2, 1, and you're not paying attention to the 1 hour, the 4 hour, the daily, even the 30-minute dealing range. You're getting stuck inside of that, small time frame window, which I think a lot of newer students learning this model don't really realize, that you can get caught up in this, and you need to understand what creates a high probability model versus a low probability model. And there was no news drivers today, so that also creates a low probability environment coming off of Thursday and Friday, which were very large range days. So all of this is predictable. All of this is easily identifiable before the fact, and we already know this. We've been taught this. And if you lost on some of these trades in here, that's just mainly due to experience. That's due to not losing enough. Like, trust me, I've lost plenty of times and stuff like this. And you just learn your lesson and you move on. So price uses this nice balanced price range on the 5 minute to send price higher, taking out sell stops here, digging down to a discount, and then we eventually rate out the buy stops. So going back to the Telegram, this was, at least my time, 1:45. So I got back from the gym and price was already inside of that volume imbalance. So I will touch on a small setup here that you could have used to go short. I just personally didn't, I wasn't on the charts at that time. So price takes out buy stops. There was a SMT divergence with, I believe, US 30 did not make that higher high, along with US 100 and US 500, or yes, NQ Dow. We have a nice displacement. We have a shift in market structure there. And then we have a fair value gap resting here. So this would be your reclaim fair value gap. 3 times is really all you want to see on a reclaim PD array. And if you take from the dealing range high, I'm actually going to use this wick because it's a little bit higher. It's dealing range low, we dip into a premium. Now for this type of setup, unless I'm extremely confident in price, I would like to call this part of a, the YouTube model, because sometimes you're going to have basically two maybe 3 points where you can enter before the market just leaves. Sometimes you only get, one. So let's just say, price just displaced super heavy on the sell side. That would have been your only point of, entry. But I like to call this kind of a confirmation setup. So I like to see price basically give me more information. I like price to confirm the overall setup for me before I get into the actual, I guess, setup that I like, because there's plenty of times where you'll see this happen and then price just runs higher. And I said to Dade also, when you're using this model, look at the other side of the, I guess, curve or the run up prior to the buy stops or the sell stops being ran. Look at the other side of the curve and see if there's any PD arrays inside of that area that it can respect. And if you start getting a large, let's say bullish, expansion off of, like, let's say there's a nice fair value gap or a nice order block in this area, that may not be a good sign. And that's why I like to use this, I guess, part of what I call just confirmation. I like to see price give me that confirmation before I really want to settle into entering into the market, if that makes sense. So I stated here at 1:48 p.m., which if we go back in time, 1:48 p.m. is right here. I stated I would like to see 39.74 to be ran out, which was the sell side liquidity, the AM session lows there. That'd be my draw on liquidity. Now, to be fair, I said I was basically done right at the wrong time. So I highlighted this bullish order block potentially because I just thought it was, I don't normally trade PM sessions. So I was a little out of my element with this. I was looking at this order block here and price was respecting it. And I just didn't know if we were going to get this large expansion lower with, maybe 2 hours left of the day. That just kind of made me wary. So I'm looking at time as well. But all that was just a retracement into a premium on the 5-minute, and I just didn't see that. And another reason too is because I didn't see any nice fair value gaps in this area. If this order block was a fair value gap, I most definitely would have went short. Even looking at the 4-minute, there's nothing there. 3-minute, nothing there. 2-minute, there was one right here, which I possibly would have went short off of. We didn't quite get to it, just acted as a breakaway gap. And then the 1-minute, there was basically fair value gap in the same area. Even if you extend that down to a low, it didn't quite reach it. But it did return into a premium and it did use that order block. Some may ask, why didn't I enter off of the order block? Because that's not my entry pattern. That's not part of my rules. Now, could I make it part of my rules? Sure. But what does that add to my trading? That adds more variance. That adds more probabilities. That adds more variables. And I like to cut down as many variables and probabilities as I possibly can in my trading, because if you start adding, let's say, okay, now I'm going to start entering off of order blocks, breakers, mitigation blocks, balanced price ranges, etc., you're now adding in more and more variables, which creates more probabilities in your equity curve, in your trading, in your P&L. So that's the reason why I didn't enter off of it. It's just simply due to rules. And I honestly just didn't think we were going to respect that. Reason being, it's not the cleanest order block, and we already used it once to send price lower. Obviously, in hindsight, this is beautiful. Just returning into a premium and using a premium PD array to send price lower. In hindsight, do I wish I caught it? Sure. I talked about this. So I said many of you are probably wondering if I'm mad or upset, which I don't think many of you probably were, but I was just kind of putting it out there. It's the reason being I have an abundant mindset. I have seen these concepts play out every single day for years, and it's nothing new or surprising. And I think some people were confused on this. If you knew you could win the lottery every single day, week, month, would you be rushing to buy lotto tickets? And what I meant by that is if you knew the lottery ticket numbers, like the winning numbers, you knew it every single day, and you could go to the, gas station or wherever you buy lotto tickets, and you could go there every single day and buy a lotto ticket and it would be a winner. Would you be rushing every single day to go buy, or would you be mad that you didn't get a lotto ticket that day? No. And that's the same way I kind of feel about the markets. It's like with these concepts, I see this shit play out every single day, every single week, every single month. I know I'm never going to miss anything. The market, the algorithm is never going to go anywhere. I don't have a fear of missing out on anything. And what that does is it creates better consistency within my trading because I'm never fearing of missing a move. Like even if I do miss a move, I don't care because I know the next day or the following day or week I can catch a setup. So I think if somebody felt bad that they missed out on this, it's no big deal. I promise you tomorrow there's going to be another setup that we can take. But I would classify this partially to quote unquote what an actually missing a move is. Actually missing a move is not entering on the criteria and the rules that you have set out for yourself in your model. So to me, I'd kind of qualify that as quote unquote missing a move. Other people say, oh, price just ran, but there was no model set up. To me, that's not missing a move because there's no rules and criteria to that. So that's kind of the difference that I create on quote unquote missing a move. So if you dig down to the 4-minute time frame, after price displays lower, I put in the chat, if price comes back up into this fair value gap here, I'd be willing to go short. Reason being, it's inside of a premium. So does this fair value gap qualify us to get into a trade? No. Again, this is not missing a move because that does not qualify us to get into a trade based on our rules and the criteria set for ourselves. And if you want to disobey that, see how well that works out for you in the long run, because I promise you it's not going to work out very well. And then eventually ran the sell side at 39.74. So overall, as far as analysis goes, we predicted it basically to a T, running into the volume imbalance, running out buy stops, seeing the model form on lower time frames to go short. It's that simple to really be a good analyst. I see a lot of people being a good analyst on Twitter. It's not hard to do that. What's hard is being able to enter into the market, managing that trade, taking profits, and not being greedy. That's the hard part. So tell the difference between a real guru and a fake one. I think that's going to be it for tonight, guys. I will talk to you tomorrow. Until then, good luck and good trading, everybody.